Hello, ladies and gentlemen. Welcome, welcome to the live YouTube live. This is the first time of me coming to live on YouTube. Okay, first thing first. Let's go through the disclaimer. I am not an educational expert or financial advisor or financial expert. Or nor an educator. So forex is extremely volatile and it can be risky and you can lose money in the market. So please do your research and education before entering into the market. So thank you very much. Having said that, alrighty. So I'm looking at the Australian USD. This was made before this. Uh, n- uh, Here we have a new year now. Tomorrow, the market will open tomorrow at 5 p.m. Eastern Standard Time. Right now, this is my Eastern Time zone, which is New York Open. But I'm living in Australia, so it's a bit different from my real time. But I love to wake up for the New York Open. That is why I have the time zone set for the New York. So tomorrow at 5 p.m. Eastern Standard Time, the market will open, and let's see if we can predict something or not. But basically, this is was backtesting what had happened the past this holiday week. What was the market movement or whatever. Currently I am not trading in any live account because I'm learning, still learning, and I'm currently trading on the demo, preparing for more going live account in this 2021, which is the goal of mine. So let's go through. So this was the Australian USD. I have marked this one as a institutional candle, and Australian USD had been a massive bullish market from March, massive bull run. And also, first of all, we need to go from top down approach. Okay, always top-down approach means we need to go from the bigger time frame. What is happening on the bigger time frame on the smaller and going on smaller regularly. So, from the bigger time frame, we can clearly see that the market has run through these liquidity, these low. Okay, market has run through these low. We have another low on the here, which is around 2002. I think it's very unlikely to go and grab that low. So this low is got grabbed. So the market has reversed from the March. Okay, so COVID was the turning point for the Australian USD. So this is particularly the bigger time frames overview. We have relatively equal high in here, which can be the next target for the bigger time frame perspective. And also here we can target here and this zone. So this could be the next target for this coming months, coming year 2021. So I am basically looking for the Australian USD as a bullish, and also in USD we have the COVID situation is worsening, so I am getting sentiment that the USD is still in bearish. So if USD is bearish, the Australian USD will be bullish. So we will look for the buying opportunity in the lower time frame. Right on the weekly, Let me go through this. We have this relatively equal high, so that the liquidity resting point. Market will go and grab the liquidity, and we should always consider that the market is how the market is moving. The market is either looking for liquidity or it is destroying the liquidity. That means seek and destroy. Okay, it is always seeking for the liquidity and destroying the liquidity. So we have another liquidity zone. We don't have an imbalance. Very nice price action on the daily. Let's go left. We should go left before going right. Okay, always go left before going right. So all this liquidity zone has been knocked off. So we have still more liquidity on the top side. That is why I'm looking for the buying opportunity. We have buying from October, continuous buying around 700 pips buying. That was very nice. So for hourly, in 4 hourly, I am looking for the institutional candle where the market can possibly come back and test that candle and go to the direction, because the market cannot straight go up like here. Let me draw. Market cannot go straight up. It will do some retracement. It will do some retracement and go push ups. Okay, so this will be the, so when there is big run, I'm looking for the pullback. The pullback, the testing point should be an institutional candle. We can go on the institutional candle in the future videos, but I do have my videos on institutional candle on the YouTube. You can go and have a look. uh, you can find what are the point of interest, institutional candle, what to look for, those liquidity grab, because most of the institutional candle they do the liquidity grab. So all right, so here have this big institutional candle. That means this big forward move. What does this mean? That because the market is run, they are run by banks, they are run by the institutions. So this is the institutional move, because the institutional love to get a better price for the buy, and they will do opposite. So they will sell to buy. Then their sell, when they are buying, their sell trade, they are in drawdown, massive drawdown, but they have to come and mitigate the sell, and they came back, mitigate the sell, and boom, market took off, and continuation. Okay, so this was my 4 hour plan, 4 hour, 4 hour, and we have FOMC over here, 20 FOMC with FOMC over here. Sorry for that. So going to the low time frame, if we miss this move, don't worry about that. Okay, this was we should have missed the move because this was not in the New York Open kill zone, and there was 5 a.m. Eastern Standard Time. That is London Open. The market made low on the London session, and boom, went up reversal. And we are basically looking for the entry point inside the New York session kill zone. That means 8 a.m. Eastern Standard Time to 11 a.m. Eastern Standard Time. That will be the perfect timing for the entry points. Okay, guys. So here I have marked the institutional candle open, but this candle is tested. It's untested, but we have this big wick. Can you see this, guys? What is this wick mean? It will tell us the history that there was a lot of selling, but who does the selling? Institutions. That's why I'm going to low time frame, back to low time frame. Clearly see, you can see these. candle moved to grab these lows. Again, market came up, came. If we miss this trade, also that was it. That was 8 a.m. Eastern Standard Time. That was our London session, New York session kill zone. We could have entered in that trade and made some made smart pips, like 70, 80 pips, but no worries. This was the sign that bank have taken over the market. Okay, so we are waiting for the bank to come down to test that zone. Right, the next zone it is come, but before this will have made one some hints. So this is liquidity. So it's relatively equal lows, liquidity, liquidity, and here we have some wicks, liquidity. This immense pressure coming down, and this was inside the New York kill zone. Okay, New York kill zone. I came back there, tested, and boom, market just took off. I never looked back. Could have also another entry point in this one here. This Australian USD, the New York session kill zone. You can also target New York session kill zone with this institutional candle having over here big push out, big push. Okay, how? First we are looking for the breakup structure, big push with breakup structure like this, breakup structure, and coming back. Uh, we put our Fibonacci and we will jump in 71%, but here our stop loss would have been below this week, and you can see it was not tested, and actually 70 stop loss is a little bit too aggressive, so we would put like 10 pips, 10 pips stop loss, 10 pips stop loss, because if this market comes straight down, you will have a much potentiality to that market can reverse. So came down, tested the zone. We had a little bit of drawdown, like 5 pip of drawdown, and we took off. My first TP will be standard deviation 50, and second TP like 30 pip, 45, and 58 pip. That will be my last TP, or you can swing that up to this 2.0 standard deviation. Would have given you some immense 1 to 6 risk to reward, which is very nice. And you could have opened two positions. One positions you could have closed inside here, and one position you can run and the positions and swinging that position for the different weeks. And before the new year, okay, before new year closing, you should have got out of the trade, like in New York Open, like here. You could have got out of the trade. That would have made you 1 to 10 risk to reward. That means risking 1% and getting 10%. So basically we risk 2%, but when you risk 2%, you are getting 20%. 20% return. That means you are just aiming 5% a day. Here, how many days does it went? Uh, how many days does it take? Took like 1 day, 38 hours, and you are 20% up in your account. So how good is that, guys? So that will have been of greater impact. That will be the greater impact while you're trading, because you just need to wait for the right moment. Okay, this is just a AUD USD. We can do same to the other pairs. Right now I have this watch list made. My watch list is containing of the major pairs, and mostly the cross pair. This Australian CAD. That means I can trade in Australian session and New York session, Euro odd, Euro CAD. Those are the merging sessions. Okay, There was very nice trade on the EuroCAD this week. Last week we had a breaker block, order block on in here. This is bullish order block, but the market broke. That made it breaker block. And I was expecting the market come back and test it here, but we have our fib high, low, 71% optimal trade entry. Boom, market came down. Market gave you like 65 pips. If you had taken some profit over there, that means 3 to 1. And if you had done change the stop losses, you could have another trade like 0. From 0, just clearing this low till TP1. You would have made 120 pips, that means 7% of the account, that means 2%, 14%. So last week, before new year, your account could have been like 20% there, it's 14% here, 34%, and now again similar kind of setups are happening before. And here, let me break down this. New Zealand USD was also the bullish market. This move came down and cleared these lows. Institutional move that makes this an institutional candle, and low high came down to 71%, and boom, market took off. Like would have made a lot of pips, like six, like a lot of 12%, 7, 14%. You could have 50 to 70% up right before New Year. That will have made you a happy New Year. Okay, guys, having said that, let me end this today's session. This was just a backtesting session, but clearly, I will clearly say that I didn't catch the moves because I was just testing my strategy. Actually, this is not my strategy. This is an institutional concept whose founder is Michael J. Huddleston. Thank you, Michael, for teaching us. And I would like to thank my IM academy educators for teaching these concepts, because these concepts I came to know from them first of all, and I began sourcing on YouTube and got some three videos from my Michael. He's the founder of ICT concepts. So say that happy new year, guys. Thank you very much for joining me. Hit like button. You can do me a favor by hitting like button and subscribing. Thank you very much.